pre-trade or new startups. So you have to be trading for less than 2 years to qualify for it. It's tend to be lent to potential businesses where more traditional routes, such as banks, would decline. It's got a low rate of interest, terms of up to 5 years, and no security are required. Also, which is really key for this, mentoring support becomes available. So someone like myself or another finance advisor would mentor the new business startup as well. Disadvantages of this is you need to have a formal bank decline. It's got a very full application process. It's a long application process. And more often than not, it requires a credit check as well. Okay, can we move on to the next slide, please?
Yeah.
Okay, so after the government startup loans, another form of finance that you could look at, and again, this is a loan, is what we call asset finance. Now, asset finance is available worldwide, and again, it's a loan, so it's debt finance, and the loan is given for a piece of large capital equipment normally, such as machinery, and the loan is secured on that machinery, meaning that interest rates tend to be low because it's a low risk lend for a lender. However, if you fail to meet your repayments of that loan, then they have the right to repossess the item. Now, it is less expensive than other forms of lending. There's more security for the borrower. But the disadvantage is it can only be used against assets that are resaleable, so it's normally quite a large tangible asset. But again, if that's something that you're looking at, it is a very good form of finance. Can we move on to the next one, please?
Yeah, it's done.
Okay, now this is the last one that I'm personally going to talk about today, which is invoice factoring. And again, this is available all over the world now. And invoice factoring is a really good way of getting cash flow into a business very quickly. Invoice factoring is a way for a business to fund cash flow by selling their sales invoices to a third party. So basically, all of the sales invoices you have, you would sell to what's called a factoring company, normally at an agreed discount. It's normally provided by finance providers or by banks, and the business can convert outstanding invoices due in 30, 60 or 90 days into immediate cash. Now, there's obvious advantages here. It benefits cash flow, limits personal liability, reduces your debtor book administration and all things like that. But there's also disadvantages. It can be really expensive. Sometimes you get tied in for 3 years. So I would always say of invoice factoring, if this is something that you're thinking about or something that seems attractive to you, definitely read through your small print. Could we move on to the next one, please? So why has there been such a rise in alternative finance? So the ones that I've just talked about there are really kind of the most 3 common form of debt finances that you've seen. But there's a large number of alternative companies coming onto a market at a time when traditional bank lending has been in decline. SMEs have a much wider range of products and providers to choose from. In 2015, in the UK alone, approximately 20,000 SMEs raised alternative finance for online platforms for over £2 million. And this is becoming more and more common. So this leads us on to our next slide. Can we? Yeah, thank you. Which is what's the benefits of choosing something slightly different, choosing an alternative form. It gives you much greater choice, as it says here. There's more flexibility as well. Less bureaucracy, quite often less paperwork, less application process. You can get really rapid access to your funds. Some of the clients I've worked with where they're looking for what we call panic money, where they need to pay salaries at the end of the month, when we've used an alternative source of finance to get them those funds, they've had the money within 48 hours. And these businesses, these alternative financiers, are really good and expert in the SME market, so they understand all the difficulties and challenges that you're facing. In the past 2 years, the rise in alternative finance, raising crowdfunding and peer-to-peer lending, equity and angel investment has been dramatic, particularly around crowd as well. And this is where I'll now leave you with Bev Hurley, YTKO CEO, who will talk you through this in more detail.
Okay, thank you very much, Vicki. It was very interesting to see all that on debt financing and other alternative source of finance. I think it's very useful and not so much used or think about in any case. So I think that's good. Just to remind everyone, yes, all the slides will be available after on the website from WeHubs. So of course, if you didn't have time to look at all the details, you will be able to look at the slides after that. So now I'm going to hand over to Bev for the next set. So I'm going to do the slides as well, if I can. I think that's that. All right.
Thank you, Thierry.
It's okay.
I've put my video on. I don't know if anybody can see me, but if they can't, I'll turn it off. I'm going to whiz through very quickly because we want to try and catch up some time now for some questions. So my experience, I've run 4 businesses. I've had some small ones, some larger ones. I've had high growth. I've doubled, and I've halved. So I've been through the growth curve a lot. I'm also an angel investor, and I run an informal angels network. Okay, Thierry?
Yeah.
So we're on a mission in the YTKO group, as you can see there. When we started that mission in 2006, we thought it was pretty ambitious, but actually we've supported more than 13,000 businesses now. So not just our own direct experience of starting and growing, also that of our teams, because quite a lot of our staff have run their own businesses before they came to YTKO, but also we've been informed by the 13,000 businesses we've supported over the last 10 years. So what I'm going to say is not just my view, but view of lots of others as well. Okay. This is just what the group do. As you can see, we work all the way from startup and pre-start, all the way around through high growth companies, through scale-ups, through normal small businesses, all sectors, right up to mature corporates. And at the heart of everything we do is access to finance, because it's such a critical part of business, whether that's microfinance for disadvantaged, lower skilled entrepreneurs maybe coming out of long-term employment, all the way up to venture capital and through all the things that Vicki talked about. So picking up where Vicki left off on the next slide, the crowdfunding landscape is massively exploding across Europe and the States and so on. And there are really 3 key ways to raise money. One is through rewards or donations, where, for example, if you're a brewer of beer, you might want to raise funds to expand production, and for every £10, £50, £500 that people invest, they will get a case of beer every month or similar things. So your business has to be appropriate for, it has to be a product in that sense, so that you can give people rewards. Or you can raise money through the crowd by giving away your shares, so it's a pure equity investment basis. So crowdfunding does have the advantage of you can help to test your markets, see who's out there, see whether people are interested, see whether people will back it with their own money. And it does avoid the rather time-consuming process of going through what we might call the professional angel market. This is a very easy and straightforward way to raise money, either for equity. Yes, you have to do a video. Yes, you have to promote yourself and so on and so forth. And you will have to manage multiple customers very quickly, or multiple investors, both of which have their headaches. But we can perhaps come back to that in the question. The other form is peer-to-peer lending, which is direct lending from my business to your business. The crowdfunding portals take a cut of that, and it's normally cheaper, therefore, because they can reduce the margins that a bank would charge to lend you money, and that is growing massively as well as another market. So the whole crowd thing is exploding. It can give rise to unsophisticated investors, and so for the angel perspective, I'd just like to talk a little bit more about that compared to the crowd. Thierry, can you move on, please? Thank you. So all these slides will be up on the website, so I'm not going to go through the different parts of it. I'd rather get on to Florence's talk and the questions. But raising formal private equity through angel investments, you're reaching out to people typically that have earned their own money through their own success of growing a business. The average investment in the UK is about £50,000 from a single angel, and often angels act in consortia, so you might be able to range perhaps up to £1 million if you're very lucky and have a very good proposition that can scale fast. The angels are aligned with your business. They want your business to succeed. They're giving you their money in exchange for some of your shares. So most angel investing is hugely high risk, because although you may think you have the best product since sliced bread, the reality is that most angel investments fail. So investors do quite a lot of due diligence. There'll be lots of legals, and this is a more lengthy and serious process. Because if I were giving you £50,000, I would really want to know everything about your business. There are fewer women who raise equity, because equity, whether it's angels or VCs, is only suitable for businesses who can really scale. And therefore, running a high growth business is not a common choice for women, because they might have family, caring responsibilities, or so on. Although we are now seeing that is starting to change with particularly younger women in technology. Looking at a couple of blockchain investments at the moment. So we're starting to see a few more women, but the reality of running an invested business is quite different from anything else. So just the last slide quickly on the venture capital market. Venture capitalists don't like risk, so they come in much later with significant money, usually after usually, not always, after the product has got to market, maybe the second stage of development. They're coming in once there's a track record, and their money is used to deliver that rapid growth and scale. And they have, there's lots of tax reliefs in the UK for both angels and investors. So if you think of angels as the first tranche, actually they're probably not the first tranche. There's something we call friends, fools, and family, the 3 Fs, who might well come in, you know, with the investor in the very, very early days. But for external raise, angels are the first, venture capitals much later, much more aggressive, much more demanding. We'll always have a director on your board, lots of legals, you'll pay for them, as well as your own legals, and so this is a whole new ball game to get up to the venture capital stage. And again, only between 1 and 2 of every 10 venture capital investments actually succeed in generating a return for the venture capital people as well. So even though they do it all day long, they have no better judgment than the rest of us, I don't think. So that's all I want to say just quickly about the world of VCs. They are called vulture capitalists in some quarters because they can be aggressive, compared to angels who tend to be the lifeblood of early stage investing companies. Okay, thanks, and on to Florence.
Okay, thank you very much. Bev. Yes, we're going to go because it's a bit fast already, so we're 3:45, to Florence in France to talk about the Business Angel Network in France. Florence?
Hello, hi. Hi, everybody. So I'm Florence Richardson. I think a lot have been said earlier by Bev, so I will try to go as quickly as possible. Femmes Business, just a few words on Femmes Business Angel. I'm a co-president of this all-women network of business angels in France. We are a bit more than 100 business angels. And our network was created about 12 years ago in a very with the goal of motivating women investors to coordinate their investment as business angel in what was then and still is actually a very male sector of investment. So we are the only all-women network of business angel in France with credibility and quite important. And we did invest last year about 1.5 million euros in a bit more than 20 companies with high potential of growth. What's interesting with business angel investing is that it does leverage with other kind of finances because, for example, globally in France last year, 50 million euros were invested by business angels, but the total investment of these equity funds was 130 million. So it does leverage with other financing, whether they're public, banks, or co-financers as fund investment. I won't go back on the different stages of equity financing. I think we have been hearing pretty much where we stand. We come after friends and family and before the venture capitalist. One thing that we see more and more here is that we co-invest with a lot with either crowdfunding or seed funds, and that's a very interesting move that we actually see here in France and I guess throughout Europe is co-investments from business angel with other type of financiers as seed funds or crowdfunding. Just on the next slide, please. Very quickly, how does it work? Bev said it was long, it was more difficult than just friends and family. It's true. It's not as difficult as venture capitalists, but it is a long process. So you need to be very well prepared. You really need to fine-tune your pitch. You need to anticipate. Basically, the process is you have an executive summary, you post it on the platform, then you go to a screening process, you do a pitching event or several pitching events in front of investors, and then goes the due diligence, and if everything goes well, you end up with the closing when you sign all the documentation, the shareholding agreements, and everything. And you will have, after your investment, quite a lot of follow-up and reporting to do to your investors. I will not go through the whole process because time is running, but just I'd like to say a few words on a pitching event, which is quite important and that you pretty much can use everywhere, not just in front of business angels. So maybe the next slide, please. Yeah. What is a pitching event? It's pretty much you have a few minutes, usually 10 minutes of presentation, 10 minutes of question and answers to present your project and try to have the investors in front of you interested and wanting to know more about you and your project. What are we talking about? The team. The team is at this stage of investment, which is very early stage, very risky for all the investors. The team is, I would say, 90% of, maybe I'm going a bit far, but 90% of the decision. You need to really be convincing. Background, cohesion of the team, the personal investment, financial investment, your skills, your dynamism, your leadership, everything is important. Your knowledge of your environment, all that is absolutely important. Obviously, other things are important, like what is your offer, whether it's what's the client value you bring, is it the right time to market, is it coherent, do you have a market, is there a good growth potential, because as business angel and as was said earlier, a lot of this investment, they don't go anywhere, so the ones that will actually succeed, they need to succeed on with a very so we need to see a really high potential in these investments. How do you access the market? What is the competition? What are the barriers to entry? All this is very important. Oops, and I've lost my screen. Anyway, the fund you are raising, what are they here to? How will you use these funds? What are the potential of the funds, and will they be enough to achieve your business plan? We need to understand when your next steps are and whether you will need other rounds of financing. What are the milestones? The valuation, we haven't talked about the valuation. It's very important. If it's too low, it's you will be too diluted, and if it's too high, you won't have any investors. So find the right valuation is a very difficult exercise, and sometimes long conversation, debates between investors and founders. And we need to understand the exit perspectives. We need to make sure that we are convinced that they exist, and also that there is some link between the entry price and the potential exit price. Basically, you'll be pitching in front, usually in a very in front of lots of men. That's one of the key of our network, is that we try to gather women to invest in company. We do not invest in only women-led companies, but the women that come and see us, they find the environment of women investors very different from male investors. Anyway, as a woman an entrepreneur, it's very important that you are convincing, you are assertive, you are dynamic, ambitious, because these are the codes of what investors want to see. I think I will just go directly to the conclusion. Be prepared. Raising money takes time and energy, and it usually puts on hold everything else, especially the business development. Do not wait if you want to see business, if you want to raise money with business angels or funds until you are short of cash. You really need sufficient time. You have to be ready and offer really something, a consistent package. And as I said before, we now usually co-invest a lot with other funds, crowdfunding, other networks, several networks, BA networks. So it's very important to coordinate the various stakeholders. Otherwise, this fundraising may take a hell of a lot of much more time than needed. And don't forget, you're competing with other projects, so you really have to be convincing and assertive in your presentations. I'll try to give a few minutes to the questions, so I think I'll stop there. Thank you for your attention, and I think we can try to take a few questions.
Thank you very much, Florence and Bev and Vicki. So if you have some questions, you can send them by chat, or if someone wants to talk, I think it's still possible. We have a bit of time. Any question? No, I don't see any question coming. I mean, okay, maybe I can ask the first question if you want. I mean, I was very interested about what you said, Florence, about the syndication between crowdfunding and business angel. I mean, in my experience in financing, we find it quite difficult, especially for next rounds. How do you make it work at the end?
Well, we more and more we try to have partnerships with seed funds or crowdfunding platforms. So when we have a project we find interesting, we try to work well in advance with our partners so that they can study the file as well at the same time that we are, and try to have both processes move on the same time. We also have funds here in France which co-invest with Business Angel Network. Basically, if we put €1, they put €1, and they put €1 on exactly the same condition at exactly the same conditions that we do. And that's very interesting because pretty much if you want to raise €1 million among business angels, it's quite a challenge. But if it's €1 million and 500,000 is with 2 or 3 networks of business angel, and then the other 500,000 comes from a one of these funds, then it makes the process a lot quicker and a lot easier to do. So we have that as well, and it's been going on for a few years now. It's very effective, and we really think it's actually very virtuous because of that, because it's going quickly, but also because it helps business angels who co-invest with funds that are more professional, but also have means to follow the second fund to give more potential to the company in their future development.
Sure. Okay, thank you. Yeah, I see that quite a lot of you, of course, are trying to raise money. So maybe it's a good time if you have some specific question. I can see as well Samantha is working on a co-investment fund. Yeah, if you want to say something, ask a question, just go ahead. Anybody? Or Samantha, for example, or Bridget, I see that she's interested as well. No? Oh, I don't hear. Yes, maybe your mic is off. Yes, I know, but maybe just if you have a question, Bridget, still. So Lucilla is saying, I'm just running a young startup company, and I'm understanding, yeah, at this stage, it's important to start from angel investor. And I'm understanding here that at this stage, is it important to start from angel investor?
Perhaps I can pick that one up.
Yeah.
It's Bev. Lucilla, I think that's probably the wrong assumption, because 98% of all the investment propositions we get through our network go straight in the bin. You need to understand whether your startup is the right sort of startup with the right sort of market opportunities to scale that would be right for attracting angels. So it depends entirely on what's right for your business and what your business is, what sector it is, what growth prospects are, etc., etc. So don't assume that you have to start with angels. You know, you might need to look at debt or grant or loans or something else.
Okay, I mean, okay, thank you. I think Samantha.
Just to give a few figures, maybe I can tell that, for example, we receive more than 500 files, and we finance 20. So that gives you an idea of the selection, the screening process that startups have to go through. Doesn't mean that the 480 that we don't finance, they don't have potential or they won't succeed. It's just our criteria are quite difficult.
Okay, Bridget was asking if someone is available for mentoring, ongoing mentoring advice. I don't know, maybe Bev, do you have any answer to that?
Yeah, I've just replied, and so has Vicki. So yes, you can follow up with both of us afterwards.
Sorry, I'll unmute myself and say thank you. Hi everyone, I'm Bridget. I'll go back to mute because I'm at a services, so it's noisy.
Okay, Bridget, follow up with us once you're back at base. And there were some questions about social enterprise.
Yes.
Which is a very interesting challenge, and I don't know whether Florence's fund invest in social enterprise. It's not common, in my experience, in the angel market, unless you have angels who are into philanthropy and doing social good. Most investors are motivated by money, by making a return, by contributing to the growth of a company, and there are very few social enterprises that can deliver a great return and an exit, as well as delivering social good. That's my view.
Yeah.
Just to add on that, we have, it's obviously not at all the majority of our investment, but we did co-invest not that long ago with a funding platform which has a social enterprise sector goal, and a few of our investors did co-invest with this platform. So it can happen, but it's definitely not the main purpose and the main kind of companies we will be looking into.
There are
Bridget, sorry.
Go ahead, Vicki.
Yeah, Bridget, I was just going to say there are different forms of finance other than angels that might be more appropriate for social enterprise. So there's lots of different grants available. It really depends what your social enterprise is and what funding you need and what you're doing, to what grant could be available. Also, within the UK, NatWest have a special fund just aimed at social enterprises. It's a loan, but at very low interest rates. But again, we could talk through individual challenges. It's probably better to do on a one-on-one, but just to give you an idea of different options. Sorry, Bev, if you wanted to go on now.
No, it's exactly right. I was just going to mention unlimited and those sorts of sources of finance which might be appropriate for Bridget. So why don't you pick up with her directly afterwards?
Yeah, will do.
Yeah, and I can see from Samantha that she has a very kind VC. She says it would be good to know more about it. I mean, she has a problem with microphone, but maybe to follow up on that would be interesting to know more about it.
I missed that. She has a kind VC.
Yes, that's right. She has a fund that is a very kind VC. That's what she said.
Oh, okay. Oh, that's right.
So yeah, that's good to know in any case.
She's looking for development pipeline opportunities.
That's right, pipeline
yeah?
opportunities. That's right. So that sounds good.
Okay.
So if anybody is interested, you can contact Samantha.
Yes. Has she given her email address or her website address?
Yeah, that's right. That's right. University Fund. Okay. Okay. Interesting. Yeah. Yeah, that's her email address now.
Oh, you're at the UEA. Well, in that case, that would be fairly straightforward. Oh, it's the ADAPT Fund. That's a kind of, isn't that clean energy and technology and environment stuff, Samantha? Anyway, we can pick up with Samantha earlier on.
Okay. Yes, I'm not sure there is any other question. Is there? No. Maybe, of course, a question related as well about female entrepreneurship. I mean, in the project, we have to work as well on policy recommendation, and of course, finance is going to be a big part of it. So, if you have any ideas about that, on how can we develop some specific policy recommendation for the European Commission to help female entrepreneurship to access finance, that will be very, very useful. And I will send you a survey at the end to answer about the webinar, but also if you have some comments or idea about that, that will be great. Okay? So I guess if there is no more question, I can see that there are still some discussion on one-to-one, but you can continue that after. So if it's okay, we can stop now. And I thank you everybody a lot for joining. I'm really sorry about the first 15 minutes. It was really a nightmare. I couldn't hear anything. But I think it was good to restart, and I think it was very interesting after. So thank you to the three presenters as well for the presentation, and thank you for being there. Thanks, merci.
Thank you. Bye, Thierry. Bye, everybody.
Good afternoon.
Thank you. Bye-bye. Thank you.
Thanks a lot. Ciao.